Dear all, today I thought to do a very small video on the standards. It is not just the standards on auditing but the overall standards as such. Because at times for the IPCC intermediate exam, even though they do not have detailed discussion about the other standards like SRE, SAE, SRS, questions are asked in MCQ or correct incorrect. So through this video, I just wanted to make sure that you understand in which situation the relevant standard shall be applied. Okay. So it is quality control and engagement standards. We call it as quality control and engagement standards. Now, standards are issued by AASB. What is AASB? Auditing Assurance Standard Board of ICAI. These standards issued are broadly divided into five. First one is Standards on Auditing, SA. Standards on Auditing. Second, SRE, R, Review. So Standards on Review Engagements, SRE. The third one is SAE, A, Assurance. SAE, Standards on Assurance Engagements. Fourth one is SRS, Standards on Related Services. RS stands for Related Services. That is SRS. Finally, you have the fifth one, SQC, QC, Standards on Quality Control. Now, a question comes like all these standards are issued by ICAI, AASB. All these standards has to be complied while conducting the professional work. So, in which case or when these standards has to be applied. Okay. Now, moving on to the detailed one. You remember the first standard which we mentioned was SA. A stands for audit. So these standards SA has to be applied while you are performing the audit of what? Audit of historical financial statements. So SA has to be applied in audit historical financial statements where you will be giving a reasonable assurance. So to conclude, SA is applied in case of audit, historical financial statements or information where you will be giving reasonable assurance. That is SA. Now moving on to the second one, SRE, R, review. Now you'll be thinking, isn't it same as audit? No. Usually review is conducted in case of listed companies like you for quarterly financials. Where are you people going to give reasonable assurance? No. There you are giving a moderate or limited assurance, which is lower than the reasonable assurance. But like SA, SRE is also applied for what? It is also applied for historical financial. To conclude, SRE is applied for review, like quarterly. Historical financial statements itself, where you will be giving what assurance? Limited or moderate assurance. It is not reasonable. Clear? This is SRE. Moving on to SAE. Third one, SAE. Standards on Assurance Engagement. Assurance. See, it is not audit. Why for audit it is SA. It is not review. For review it is SRE. Here in third one, SAE, you are going to give a assurance. It can be reasonable or it can be limited. It is an assurance. But unlike SA and SRE, where you are giving assurance on historical, here you are going to give assurance on what? Other than historical financial. Say for example, you are going to give an assurance on prospective information or assurance on internal controls. In such cases, SAE would come because internal control is not audit. Internal control is not review. Here you are not concerned with historical. Such assurance other than on what? Historical financial statements or information you do by applying SAE, which is Standards on Assurance Engagement. So to put it short, SAE, not audit, not review, but you are giving either reasonable or moderate assurance, but on what? Other than historical financial information. That is the third one. Fourth one you have standards on related services. Related services means other than audit, other than review, other than assurance. Now you will ask, what is that? See, for example, you are compiling the financial information. I mean compilation engagement. In compilation, are you giving any kind of assurance? No. But aren't you doing related services to financial? Such engagements are called as SRS. Okay, where you are not doing review, not audit, nor assurance. Some related services. Related services to financial information. For example, I told you about the compilation engagement, or you are doing some agreed upon procedure. Some kind of procedure, say debtors list you are preparing for obtaining some kind of loans, or you are preparing the net worth of the company. Clear? Finally, you have the standard called as the SQC. QC. It stands for what? Quality control. Now, is it quality control of an engagement or the firm? See, it is quality control for the firms as a whole. It is not an audit. Now students, we studied totally 5 standard: SA, SRE, SAE, SRS, SQC. No, where the above 4, SA, SRE, SAE, SRS, it is for an engagement, meaning for a particular assignment. Okay, whereas SQC is not for an engagement. So if you are asked to write what are the engagement standards, engagement standard issued by ICI, you will write everything except one, which is that SQC. Because SQC is not an engagement standard, it is the standard of the firm as a whole, macro. Clear? So to conclude, once more, SA, audit, reasonable assurance, historical. SRE, review, historical financial statements, but you give a limited assurance or moderate. Third, SAE, it is assurance other than historical, either reasonable or moderate assurance. SRS, fourth one, SRS, related services, no kind of assurance, some related services to financial information. And finally, the fifth one, SQC. It is quality control for the firm as a whole, not an engagement. Clear? So, I thought I'll wind up this video by showing some questions, very simple ones. Okay. From this you have to tell me whether it is correct, incorrect. I'll be just discussing the answers. I am not writing. SRE applies for audit of financial statements. Correct, incorrect. Answer is incorrect. SRE applies for review of financial information and SA applies for audit. So the first one answer is incorrect. SQC applies for an engagements. Does SQC apply for engagement alone? An engagement? No. Answer is incorrect. SQC applies for the quality control of the firm as a whole. It is not related to the engagement or engagements. Clear? Now, third one. SAE applies for historical financial statements. Again the answer is, come on, incorrect. SAE applies for what? Other than historical financials. Like I told you, internal control, prospective financial statements. Whereas SA and SRE applies for what? For historical financial statements. Fourth one. SRE provides reasonable assurance. Correct? Incorrect. Answer is incorrect. SRE on review engagement provides a moderate or limited assurance. So the answer is incorrect. Finally, the last question on this correct, incorrect. SRS provides either reasonable or absolute assurance depending upon circumstance. Answer is again incorrect because in SRS you are doing a related services where you don't give any kind of assurance. Neither reasonable nor absolute nor moderate. Clear?